Welcome to Explain the Charts. Today we're taking a deep dive into Google stock, exploring the recent news and events and comparing that to what we see in the charts. Looking at the daily chart, we can see that Google has been on a strong upward trend over the past few months, consistently making higher highs and higher lows, indicating a bullish sentiment. However, recent news about regulatory headwinds faced by Alphabet, Google's parent company, has caused a slight pullback in the stock price, as investors have concerns about potential fines and antitrust actions. The stock has been trading within a range for the past few weeks, suggesting that investors are taking a more cautious approach and waiting for more clarity on the regulatory situation. Looking at the 1-hour chart, we can see that Google experienced a sharp decline on October 30th, potentially triggered by news about Google's search dominance facing scrutiny. This decline pushed the stock price below a key support level around 172.50, a level that has held in the past, leading to further selling pressure. This move further reinforces the cautiousness observed in the daily chart. However, the recent dip might be an opportunity for investors to buy the dip, as Google's current valuation remains attractive for investors. The stock has since recovered slightly, suggesting that the recent dip may be a short-term correction. Let's zoom in on the 15-minute chart to see the short-term price action. Over the past few days, Google has been oscillating between 171.00 and 174.00. These levels could represent potential short-term support and resistance, and traders could use these levels to enter or exit trades. Looking at the 15-minute chart, it's interesting to note that during the current trading session, Google has been consolidating above a key support level around 171.50. If the stock breaks below this level, it could signal further downside potential in the short term. On the other hand, if the stock manages to break above the current resistance level around 174.50, it could indicate a strong bullish sentiment and potentially trigger a move towards the previous high around 176.00. Traders should also pay attention to the volume, which can provide insights into the strength of the price movement. Higher volume during a breakout or breakdown usually indicates a stronger move in the direction of the breakout or breakdown. Let's recap the key price levels to watch for Google. In the short term, the 171.50 level serves as a key support level. A break below this level could trigger further downside potential. On the upside, the 174.50 level acts as a resistance level. A break above this level could indicate a strong bullish sentiment and potentially trigger a move towards the previous high around 176.00. In the long term, the 176.00 level remains a key resistance level. A break above this level could signal a continuation of the long-term bullish trend. However, it's important to remember that the regulatory situation remains a wild card. If the regulatory headwinds intensify, it could weigh on the stock price. In conclusion, Google is currently in a consolidation phase, with investors taking a cautious approach. The short-term outlook for Google is uncertain, but it's crucial to watch the 171.50 and 174.50 levels. A break above 174.50 would be a bullish sign, while a break below 171.50 would suggest further downside. The long-term outlook remains bullish, but the regulatory situation could impact the stock price. Traders should carefully monitor the news and the charts for any significant changes in sentiment or price action. Remember, this is just a technical analysis and not financial advice. Always do your own research and consult with a financial professional before making any investment decisions.